The markets have been giving us what is being referred to as the Trump bump following the US elections. So let's take a look at our analyses in the various markets that we have been tracking in these market update videos and see how those analyses have progressed. We will start, as we always do, with our analysis of the S&P 500. This is SPX data. This is the analysis we've been looking at for many months now. We have a 40-week cycle trough over here at the beginning of August. And in recent market updates, I've been discussing the position of this 80-day cycle trough in the S&P 500 over here at the beginning of October. Here you can see the strong rise in the S&P 500 that has followed the US elections. And so we are left with a very obvious and prominent trough over here. Now, according to our analysis, that would be the 40-day cycle trough that we were looking at in our previous market update. It was expected just a few days later. As you can see, it was expected towards the end of last week rather than at the beginning of last week. But as mentioned in the previous market update video, because the US elections were looming at the beginning of last week, that would be the time to pay attention to potential troughs forming. And so according to this analysis, this is very probably the 40-day cycle trough. But now you will know that Hurst defined a principle of commonality, which tells us that markets around the world tend to move with a great deal in common. And the way in which we apply that principle of commonality is by looking at different markets. Over recent months, we've been looking at the Australian stock market, and we're going to look at that again today. But the Australian stock market is interesting because it suggested that the 80-day cycle trough had not yet formed. You can refer to our previous market update video to understand that discussion. And so are we absolutely convinced that this here is the 80-day cycle trough and that this here is then only a 40-day cycle trough, given this very strong move? No, we are not absolutely convinced, and I am not influencing the software to position the 80-day cycle trough here. It is quite possible that soon we might want to move the position of that 80-day cycle trough. Let's measure the number of bars. From the trough in early August to our possible 80-day cycle trough, we had 64 days. The average length of an 80-day cycle is 68 days. That is the average length discovered by Hurst 50 years ago. And if you don't understand why an 80-day cycle has an average length of 68 days, I would encourage you to download the 10 Core Concepts document that there will be a link to in the description below this video. And so this 80-day cycle trough possibly formed 4 days early. However, is it possible that the 80-day cycle trough formed over here? That would place it at 91 days. Yes, it certainly is possible. That would have been 23 days late, or at least occurring 23 days after the average length of this 80-day cycle. One of the reasons why this analysis continues to place the 80-day cycle trough over here is because of this fairly obvious and prominent trough over here at the beginning of September. The number of days between this trough and this trough over here on Monday of last week is 59 days. Now, that is probably too long for a 40-day cycle trough. And so we have a bit of an anomaly. How do we deal with these anomalies? That is the really important question. One of the skills of being a Hurst Cycles analyst, in my opinion, is dealing with the principle of variation, the constant variation in cycle wavelengths, but also being able to interpret analysis situations that are not unfolding exactly as might be expected. And that is not unusual, I should point out, when we approach a US election or any news event. When we take a look at Bitcoin later, you will see how the analysis that we performed in our previous market update video helped us to resolve an anomaly that was occurring. Let's quickly zoom in on the S&P 500 and understand how we were given some early signs of the possibility of this trough forming. Our previous market update was recorded on this day over here. I pointed out then that if this was the 80-day cycle trough, we would have expected price to find support at the level of the 20-day FLD. That is this purple line over here. The FLD provides what I call approximate support. It is sometimes remarkably accurate, but it doesn't have to be. And the fact that price had slipped down below the 20-day FLD didn't signal that anything was wrong. All that we would expect would be for price to cross back up above the 20-day FLD at this point here. And if you look at our previous market update video, that is what I was speaking about. However, as you can see, price significantly failed to cross above the 20-day FLD. On the Tuesday, it approached the FLD. On the Wednesday, it tried to get above it, but fairly obviously failed. This moment here, at the close of trading on Wednesday, was when we would have been alerted to the fact that there was an anomaly developing. If this was the 80-day cycle trough, we would have expected price to cross back up above the 20-day FLD before turning around and coming down into this 40-day cycle trough. However, if the 80-day cycle trough still lay ahead of us, then this is the kind of price interaction that we would have expected, with price crossing down below the FLD, then finding resistance at that FLD. Why didn't I then adjust the analysis? In my opinion, it's not really important. You don't want to force an analysis into a box. You simply approach the market with the understanding that this could be what is unfolding. This analysis that we see on our charts is not, in fact, invalid. As you can see, here is the level of the 80-day cycle trough. The 40-day cycle trough formed ever so slightly above it, and it doesn't entirely invalidate it. And so, as we went into the US elections, what would we be expecting to happen next? Either the 80-day cycle trough was forming late at a potential 91 or even more bars, or this analysis was correct and we were looking at a 40-day cycle trough to form next. After the formation of a 40-day cycle trough, the interaction that we expect between price and the FLD would be an E-category interaction. That is an opportunity for a long trade. If, on the other hand, this was a late 80-day cycle trough forming, then we would have expected an A-category interaction, which also gives us the opportunity for a long trade. One of the things that I find really useful about working with the FLD, or future line of demarcation, that Hurst defined all those years ago, is that even in situations of some analysis uncertainty, we are able to identify profitable trading situations, which is exactly what happened here. In my opinion, it is very likely that the 80-day cycle trough should actually be better phased over here, which we will see when we take a look at the Australian stock market, which, although also affected to some extent by the US elections, was not nearly so influenced by the US elections as, of course, the US markets were. Taking a look at the Nasdaq, there isn't very much more to say, really, because we have exactly the same situation. The analysis in the Nasdaq is still holding on to the idea that the 80-day cycle trough formed in October. Here is the nest of lows for the 40-day cycle trough that we were expecting. And if we zoom in, you will see that the interactions between price and FLD have actually behaved very well. Following this 80-day cycle trough, we would expect price to cross up above the 20-day FLD, which it did, of course. It would be expected to achieve its target, which it also did. As the 20-day cycle trough formed, we would expect the 20-day FLD to provide support, which it did for a fairly epic almost 2 weeks. Then we would expect price to cross down below the 20-day FLD, which it did over here, on its way down to the 40-day cycle trough. There's the nest of lows for that 40-day cycle trough. Potentially this was our 40-day cycle trough, and here is our E-category interaction as price bounced out of the 40-day cycle trough following the US elections. Again, we have exactly the same situation in the Nasdaq, that this could have been an A-category interaction, and that perhaps the 80-day cycle trough will prove to have formed over here in early November. And here is that Australian stock market index, the ASX, and this was the market that was suggesting that the 80-day cycle trough might in fact lie ahead of us. And as you can see, that 80-day cycle trough has now been found in the analysis as having occurred over here on the 1st of November. If we measure the number of bars, then you can see that here too we do have a long 80-day cycle, but it is only 87 days because of the slightly different trough positions in the different markets. 87 days is 19 days long. It's not too long for an 80-day cycle. And interestingly, the anomaly about the position of the 40-day cycle trough is resolved a little bit because of the different position again of that 40-day cycle trough. And so here we have a very long 53-day, 40-day cycle. It is long, perhaps impossibly long, but generally speaking, this analysis works much better for us than positioning the 80-day cycle trough as having occurred over here at the beginning of October. We also have a very nice, clean identification of the interactions between price and the 20-day cycle FLD with a full A to H sequence of interactions, and here is our A category interaction that occurred last week. And so the Australian market is clearly just starting into its next 80-day cycle. One slight warning amidst all this bullish excitement, this next 80-day cycle will of course be less bullish than this one over here, because of the fact that it is the second 80-day cycle in the current 20-week cycle. There is a very early position for the circle and whiskers of the next 20-day cycle trough, which will of course be pushed out because of the extension of this 80-day cycle. We've been looking recently at the Nifty. We get many requests to look at the Nifty, and here it is in our previous market update video, which was recorded over here. I mentioned that the 80-day cycle trough was due, and we were expecting that trough to form. That trough did not form as was possible at this bar over here, but it is possible that the trough has formed over here. But as I pointed out in our previous market update video, the confirmation that that trough has formed will be given to us when price crosses over the 20-day FLD, this purple line over here. It made an effort to cross over the FLD last week, but as you can see, it failed to get over that FLD. Bear in mind that the median price must cross the FLD in order for it to be a valid cross. And so we have had two occasions of price finding resistance at the level of the FLD. This could either be what is called a double GH category interaction pair, and if you don't understand that, I'm not actually going to explain it now, but for those of you who understand the FLD sequence, you will know that we do sometimes get double GH category interaction pairs forming. That is the one possibility. The other possibility is that this week price will succeed in crossing over the 20-day FLD, in which case we have found our 80-day cycle trough, which will then be positioned over here at the beginning of November, as it is in the Australian markets and potentially also in the US markets. In that case, this example of price finding resistance at the level of the 20-day FLD would not in fact be labeled a GH category interaction pair, but a pre-A category tap. That's getting a little complicated for these market update videos. The important thing is that you need to be watching this FLD for price potentially crossing over it and thereby confirming the formation of the 80-day cycle trough. Gold has been behaving extremely well from a Hurst perspective. This is the analysis that we've been tracking, and in my previous market update video recorded on this day over here, I mentioned that we were looking at price potentially popping up to a slightly higher high to form the 80-day cycle peak, and indeed that is exactly what happened. Only 2 days after I published that video, price then crossed down below the 20-day FLD on its way down to the next 80-day cycle trough, which is also of course a trough of the 20-week cycle. We have a displaced circle and whiskers for the 20-week cycle trough. The reason for that, as I think I mentioned in the previous market update video, is because the calculation of the recent wavelength of these cycles measures 6 cycles back, and 6 20-week cycles is a fairly long way back to look, and of course the cycles have expanded in recent time, and so these shorter cycles are pushed further over to the right. The 20-week cycle trough must of course be synchronous with this 80-day cycle trough. Notice that our composite model line is looking for a trough to form about now. Potentially it is thinking it could have formed here, and we are looking for the price of gold to bounce up, cross over through the FLD in an A category interaction. You can see our interactions have been identified here, and they follow a fairly textbook sequence. Notice a very high rating for that sequence of FLD interactions, 84.6%, indicating that targets were reached as expected and that the sequence worked really well. That gives us confidence in this analysis. Has that 80-day or 20-week cycle trough formed over here? Absolutely not yet. We need to see price crossing over the 20-day FLD as we did in the Nifty to confirm that the 20-week cycle trough has formed, and it is certainly possible that the 20-week cycle trough still lies ahead of us. Bitcoin has provided us with a perfect example of what I was saying earlier about the approaching of analysis uncertainties by means of monitoring your cycle tools. And in this particular case, the power of these interactions that we track between price and the FLD provides us with an absolutely shining example of the usefulness of this approach. In the previous market update video, which I recorded over here, there we go, on the 28th of October, I pointed out an anomaly that was occurring in terms of price's interaction with the 20-day FLD at this point over here. I also discussed the position of the 18-month cycle trough and explained how some analysts were looking at it occurring earlier as opposed to it occurring here at the beginning of August. This analysis has now shifted and has positioned the 18-month cycle trough over here at the beginning of August, which then resolves the anomaly that we were seeing forming. Seeing that anomaly at this time 2 weeks ago gave us excellent forewarning of the fact that the analysis needed to change and that the 80-day cycle trough had formed over here in the second week of October. Let's zoom in and just consider in detail what has happened since then. The anomaly that I addressed in the previous market update video was the fact that as price approached the 20-day FLD over here at the end of October, it would have been expected to cross down below the FLD if this was only a 40-day cycle trough. The fact that price found support at the level of the FLD was a clear indication that this trough should be elevated to an 80-day cycle trough. In that case, we get a much clearer identification of our interactions between price and the FLD. And here are those interactions. Here is the A category interaction. We have an unusual position for the B category interaction. The reason for that is because that was the time at which the distance between price and the FLD started diminishing. It's a subtlety to the analysis of the identifications, which I'm not going to dwell on here. But the really important point to make, and the point that I made in the previous market update video, is the fact that because price found support at the level of the FLD at about the time that this potential 20-day cycle trough formed, that was clear evidence that the 80-day cycle trough needed to be positioned over there. So what is happening now? You can see that in the identification of the interactions, we have a C category interaction here, where again price found support. However, here we have the nest of lows for the 40-day cycle trough. If we count the number of bars, you can see that that 40-day cycle trough nest of lows is sitting at about 35 days following the trough on the 10th of October. Is this really simply a C category interaction, or is this possibly the 40-day cycle trough that has formed? Now, it is possible, in my opinion, that this is in fact the 40-day cycle trough. How is it possible that the 40-day cycle trough has formed so early? It is possible if we have a strong underlying trend, in other words, a lot of bullish pressure from longer cycles. And that is, in my opinion, exactly what is happening in Bitcoin at the moment. Now, when the 40-day cycle trough forms, as you probably know, we would expect price to cross down below the FLD, generate a target to the downside, and then expect price to achieve that target before bouncing up. However, when the market is particularly bullish, you will see this happening, where instead of price crossing down below the 20-day FLD, it in fact finds support at the level of the FLD. Tracking the interactions between price and the FLD would have provided us with some very useful information, and that would have been right over here at the close of trading at the end of the day on the 5th of November, because here we have a clear example of price having found support at the level of the FLD. Here is our 40-day cycle trough nest of lows. and we have a potentially very bullish underlying trend for Bitcoin. All good reasons for this strong move upwards. So just how strong is the underlying trend? I'm going to quickly show you a chart published this morning by Christopher Grafton, my colleague on Hurst Cycles Notes. This is part of our Macro Outlook newsletter that we publish every Monday morning. And this morning, Chris took a bit of a step back in Bitcoin to show us the longer term analysis. Here you can see the 18-month cycle trough. Notice the composite model line, which is indicating tremendous bullishness. This is a logarithmic chart. Notice the $100,000 level over here. We are looking for a 20-week cycle trough to form at about the end of this year. But then, of course, we're looking for a 40-week cycle peak. Looking even further ahead, towards the middle of next year, we're looking for a 40-week cycle trough. Don't take these price levels too seriously when looking this far ahead using the composite model line, but the important level of $100,000 certainly seems within reach for Bitcoin. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below this video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.